Welcome everyone to this Friday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. Trade uncertainty hitting market sentiments, with the Wall Street Journal now reporting the Trump administration has a plan B for tariffs if their court appeal fails. Despite the global uncertainty, India's economy likely picked up steam in the March quarter. DBS thinks that it could be even higher than estimates suggest. We'll get you set up for those GDP numbers that are due today. And Ola Electric's quarterly loss widens, but India's top two-wheeler maker says for the first time it aims to be profitable in full year 2026. Right, let's take a look at the broader picture in the Asian markets, and they are stumbling around. So clearly investors do not like where this tariff narrative is going. They don't like the whipsaw, they don't like the volatility in the headlines, and clearly they don't like the idea of a plan B tariff. So it's really tariffs on again, off again perceptions, and the market's trying to price that. In the Indian markets, we will be joining the trading day in about 45 minutes' time. Let's give you the GIFT Nifty futures and what they are indicating for the day ahead. We're looking as though we're going to be still quite restrained below this level of 25,000. So we're looking at 24,949, which does suggest about 100 points or so to the good. At the open, dollar-rupee exchange rate is flat at 85.3880. Now, one of our top stories, Wall Street Journal, reports that the Trump administration is working on a plan B if their court appeal on a decision to block tariffs fails. They could be looking at some stopgap measures, including temporary tariffs of up to 15% for 150 days, and utilise that time frame to come up with individual duties on countries. White House Trade Advisor Peter Navarro reiterating finding other ways to impose tariffs.
The tariffs remain in place. The court told us, they didn't all but tell us, they told us, go do it another way. So you can assume that even if we lose, we will do it another way. And I can assure the American people that the Trump tariff agenda is alive, well, healthy, and will be implemented.
Meantime, negotiations still seem to be going full steam ahead. Trump's economic advisor, Kevin Hassett, saying that the US held, quote, productive talks with India. The two countries have been trying to negotiate a trade agreement since President Trump announced reciprocal tariffs. In the meantime, Reuters is reporting that a trade team from the United States is set to visit India later next week. India is also reportedly studying the impact of the US trade court's decision on blocking Trump's tariffs. Some analysts say this could give India an edge in the ongoing negotiations. Now, on the domestic front, India reports Q4 GDP numbers later on today. Higher government spending expected to boost growth for the January to March period. Reuters poll forecasting Q4 GDP to grow 6.7% on year. Analysts predict urban demand to have remained subdued during the quarter, but rural demand is expected to keep India one of the fastest growing major economies in the world. Over the course of this month, we did see a couple of upgrades to India's growth forecasts for the current fiscal. However, some hit from global trade uncertainty is still expected. Now, as we count down to those GDP figures out later this evening, let's take a closer look at how India has been trying to push its growth and build the country. President Trump has made it clear that Made in America is where he sees his nation's future. But India's been on that path for more than a decade. In 2014, Prime Minister Narendra Modi launched Make in India, aiming to turn India from a service-led economy into a global manufacturing powerhouse.
We don't want our country's businesses to be forced to exit in the country. We need to change that.
The initiative was built on 4 pillars: mindset, sectors, infrastructure and processes. And there have been clear wins. India is now the second largest mobile phone manufacturer in the world, with 99% made locally, according to the Commerce Ministry. It launched the INS Vikrant, the country's first home-built aircraft carrier. And Tesla is reportedly setting up shop in India, with Tata Group already supplying components.
If you look at it, our group itself, Tata Group, we are spending billions of dollars in setting up semiconductor manufacturing plants. We are setting the plants in the auto manufacturing. So both greenfield and brownfield, the investment significantly. And that's where our ability to bring, and I'm talking about Tata Group, you look at any of the conglomerate in India, they're spending money in manufacturing unit.
But challenges remain. India still depends heavily on Chinese imports, which made up 15% of total inbound trade last fiscal year. Red tape, poor infrastructure, and global competition continue to hold back progress. The original goal to grow manufacturing to 25% of GDP by 2022 was pushed to 2025, and it's actually shrunk. Foreign investment has dipped, and manufactured exports haven't significantly improved. Even a $23 billion manufacturing incentive program that signed up 750 companies, including Foxconn and Reliance Industries, is now being phased out just 4 years in. Still, the government is pressing forward, rolling out a new national manufacturing mission, promising streamlined policies, digital trade infrastructure and business-friendly reforms. Whether this renewed push will transform India's manufacturing future or fade like past efforts is far from clear. Right, let's do a deeper dive on the data and the economic outlook for India and bring in a good friend of ours, Taimur Baig, is with us, Chief Economist and Managing Director at DBS Group Research. Taimur, great to have you on the programme on Inside India. Let's tackle the whisper number first, if we may. The consensus is pointing towards 6.7, 6.9 on-year GDP growth for fourth quarter of FY25. Ambitious or achievable?
Very much achievable. I think that as the financial year progressed, some of the key concerns we had with that GDP forecast sort of ebbed away. We, 6 months ago, still felt energy was going to be a drag. We felt that overall demand turnaround would be poor. Those things have turned out to be somewhat unfounded. We're looking at an economy where consumption is fairly resilient. We're looking at tax data that is buoyant. We're looking at fiscal pressures ebbing. Balance of payments pressures ebbing around low energy prices and a weaker dollar. So it's all working out pretty well for India from a position where even 6 months ago things looked a bit iffy.
Interesting. We hear that expression, resiliency and robustness, despite the global macro picture. But there's still quite a lot of dispersion over where that leaves FY25 forecasts. RBI seem confident of 6.5%, and more or less optimistic at 6.2%, and then 5.8% for FY26. Is the reality somewhere in between?
Very much so. So low sixes is where we would settle ourselves as far as the growth outlook is concerned, which is a good number considering the despondency around the global investment environment we're seeing given the tariff uncertainty. The fact that local sentiments are buoyant, independent of external noise, is very, very helpful for India. In fact, that makes India a bit differentiated from the rest of Asia, which is very trade dependent, very worried about the trade outlook. India has some worries, but at the same time seems to have a pretty domestic demand-driven momentum that's independent of that.
Can we continue to count on government capex spending and that model to keep consumption-led growth ticking around 6.5%?
It's very helpful. I have to admit, but at the same time, there is a point when the government may not have to pull the weight that much. If you have a nexus of positive domestic sentiment, along with domestic investment, both from FDI side as well as domestic capital deployment from local Indian businesses, then you could have a virtuous cycle where private sector demand can begin to outstrip the momentum that you see coming from capex. But you got to have the foundation in place. If you build it, they will come. The government in India is very committed to building it. And then you got to be a bit lucky, oil price, global environment, investor sentiment. If those things align, things can turn out to be very, very good.
Isn't it a bit like waiting for Godot, though? We played that report there on where we are in terms of Make in India. Is it working insofar as it is crowding in private capex, or does it need to be reimagined? And if so, what needs to be changed in the policy?
I don't think there's a crisis that requires reimagining the model. I mean, the model would be perhaps benefiting from a little bit of tweak here and there. What are the contours of Make in India? What are the critical technologies where India can comfortably invest and see decent returns, as opposed to going into a very crowded field, let's say AI data centers where the whole world is sort of deploying a lot of capital. So I think those sort of pragmatic approach to where there's the biggest bang for the buck is where the central government's role come in. The private sector is doing its thing. I mean, we're seeing pretty impressive amount of capital deployment, but you still need a bit of a nudge in this world where governments are playing a very, very big role in determining the direction of flows.
And we'll get into the trade deals that are waiting in the wings and how that potentially could supercharge FDI commitments. But overall, Taimur, when you look at the Indian context at the highest level, how concerned should we be about perceptions of slowing reform momentum?
I don't think we have a set of investors out there that are very frustrated with India. Everybody would like more traction, more grease in the wheels so things move faster. But I don't think there is a huge laundry list of complaints that India is a very hard place to do business. This used to be the case. Things have improved, no question about it. There's room for improvement on business approval, on consistency of application of corporate law, for example, those areas. But they're not deal breakers.
What about land and labour reform?
Well, that's a perennial peeve, and that's there. I don't think any outside investor has Pollyannish view on India that this is just going to go away magically. So people recognize the constraint, but they find that the constraints are outweighed by the potential.
Do you feel that the trade deals, major trade deals potentially, that India is pursuing with the European Union and the United States, UK, India is already in the bag, could that potentially lead to supercharging market access? And can India then look forward to an FDI boom, or do we have to manage our expectations on that front? Will it take time?
We should manage it. Take time is the operating word here. Consider the following. It took a bunch of years to get the UK-India deal done. It'll take one more year for the implementation guidelines to completely go through the system. Same thing will happen with EU. On the U.S., I'm the least optimistic because we're talking about deals, not agreements. Agreement means, hundreds, if not thousands of pages of technical documentation that needs to be sorted out. Right now, in my perspective, at least to the best of my knowledge, it's pretty high level. Commitments to buy this, commitments to invest there, as opposed to product by product classification, rules of origin, and things like that. So I would say it'll take time. It's, again, underscoring the previous point, it will not necessarily change the outlook for India dramatically. It will keep investors generally positively predisposed toward India. This is helpful, certainly not hurting, but it won't be a game changer in a matter of quarters.
Washington insists that New Delhi does away with agriculture tariffs and there's unrestricted, almost, market access for US farm goods. You and I know that farmers and farming matter incredibly in India. How is India going to overcome very legitimate concerns from its farmers and concerns that India could be flooded with cheaper US farm goods, there's falling prices and potentially unrest of the kind that we have seen in Punjab?
No, Sri, I don't see it happening. I think there are certain lines India would have to draw. Agriculture sector is one where it is the US or the Japanese or the Indians, it's a very, very sensitive area. And in the case of India, it matters much more than even it does for the US. So I think that...
So that's non-negotiable?
I mean, non-negotiable, maybe not the word that the Indians would like to use when they go to Washington, D.C. to talk with Donald Trump's team. They will hear them out, but there are certain lines that they will not be able to cross. I'm quite sure about that.
So some finessing there. For India, does export growth and trade matter more than before? Because trade as a ratio of overall GDP, if I'm not mistaken, now stands at around 45%. So India is that much more exposed to developments in trade and international markets, yes?
Sri, these are large economies, whether it is India or the US or China. You will never have Singapore-like trade GDP ratio in countries like these. But it's an important sector. It adds a lot of vitality to the economy. It brings in technology. It brings in hard-earned foreign exchange. So even if the ratios are not extremely high like the Koreas or the Japans are, it is a very, very important part of the economy. We have seen in the past that India, despite not being highly trade-oriented, benefits tremendously from trade-related activities. So it's an unambiguous positive, and it's a prerequisite toward a higher level of growth expectation that the authorities have.
I know we're all getting whipsaw watching the headlines and the to and fro on the tariff narrative, but this recent injunction blocking Liberation Day reciprocal tariffs, does that change perhaps the balance of power at the negotiations table between India and the United States? And does this work in India's favour if 26% tariffs may not necessarily be guaranteed once that 90-day pause period elapses, which I believe is in around early July?
Yes, we're running out of time there. My expectation on that very last point would be there'll be extensions because there's just no amount of bandwidth available on the U.S. side to deal with so many countries. As far as India is concerned and whether it gets a slightly higher or stronger hand in this negotiating table because of this court decision, I don't think so. I think the U.S. president still enjoys quite a bit of power under Section 301 and 232 and other various numbers that are being thrown around. So Peter Navarro, as you showed just before in the segment, has all sorts of plans B's and C's in place. I don't think a country trying to negotiate with the U.S., unless it has a huge amount of leverage, should try to exploit that as a marginal advantage. It might actually backfire.
Taiwo, how do you feel about the domestic inflation outlook? And does the recent run of data suggest that perhaps we're at a favourable inflection point, given monsoon rains have been abundant?
Yes, for once, I'll have to say yes to that question. I think that overall, we're heading into the monsoons with decently favourable inflation momentum. It's not heading upward in any meaningful manner. And if the rains, the way they're suggested by the data so far, are coming in a bit early, that'll really help inflation with respect to food prices to be stable. On the commodity side, massive tailwind is really going to anchor inflation expectation because oil at 50-60 is great news for India.
But it's short-term only, isn't it? Because we know extremes of climate change are the norm for the global economy. They're not going away. India is no stranger to this. So that means clearly volatility in the inflation data set moving forward.
We should definitely not take the short-term favorable dynamic as a marker for things to come, whether it is water or it is temperature, surface temperature, and its impact on crop yield. These things are major risk for India in the medium term. Even if the U.S. chooses not to be super focused on climate change-related matters, countries like India, for them, the risks are clear, present, and they'll have to deal with it.
How would you describe the Indian consumer? Of course, India is not monolithic. There are nuances and regional differences. But is urban consumption recovering? And will rural consumption continue to be strong? Because we've seen some dispersion on that front.
Sri, consumption is a slow-moving variable. Shocks that happened 5 years ago, 6 years ago, still play a role. They have scarring. So whether it is demonetization or the pandemic, they affected consumption in a very permanent manner. India is still sort of trying to recover the lost path of consumption from those shocks. And these are, again, 5-7-year-old shocks. Right now, things are going in the right direction. Interest rate is not a massive burden. Public sector banks have plenty of liquidity and eager to lend, and the private sector banks, same story. Capital flows are buoyant. Job creation could be better, but it's not bad. So put it all together, the outlook for consumption in the near term looks good. The long-term shocks, scarring are something to keep in mind, which is why maybe we're not in the China-style RORO growth rate situation, but it's pretty good.
That's an interesting point. Job creation, let's pick up on that. Could be better, but not bad. Is India, though, sleepwalking into an employment crisis? And are we witnessing what some have said is a dramatic decoupling off, on the face of it, strong GDP growth, but very little in the way of job creation?
Right, the famous jobless growth argument that capital becomes more and more efficient and productive at the expense of labor. So companies make a lot of money, but it doesn't translate into a wage growth dynamic for the average population or good quality jobs.
Especially amongst the younger generation of job seekers.
So having looked at the experience of the West over the last 30, 40 years, I think it's a legitimate concern that as you move up the industrial value chain, companies which are embracing the best-in-class technology may become more and more capital intensive. But a country the scale of India, with a thriving service sector that we have seen, I'm not that worried about it. I know that there's always a romance associated with lifting up the population through the supply chain of manufacturing. I think India has shown it doesn't have to be the only way. Service sector can be a substantial source of job creation. So I would not sort of go back into the sort of Donald Trump romantic notion that only a blue-collar job is the way out for the somewhat not highly educated Indians. There are other ways of doing it. Indian service sector could be also a panacea.
Let's wrap it up and take a look at this from the policy point of view, from fiscal and monetary policy. Where does this put the outlook for the RBI, and how many rate cuts have you got scheduled? And how confident can we be, Taimur, that the government can stick to the narrative around fiscal discipline, consolidation, and a narrower fiscal deficit of 4.4% of GDP for the current fiscal.
Right. For once, I'll be fairly constructive on both counts. I think on the RBI side, the stars have aligned. There is room for cutting rates. Energy price, rains, everything is going in the right direction. Output gap is not particularly narrow, so the RBI can afford to go ahead with at least 2 more rate cuts this year in our view. As far as the central government is concerned, they may have been sort of stumbling into favorable fiscal news. That is good, but they should just take it and run with it. There is room for consolidation left, particularly on the revenue side. We're seeing very, very welcome buoyancy on tax collection, and there is no major impetus toward accelerating spending. The envelope on the expenditure side is pretty ample, looking at the allocations in infrastructure, health, education, and so on. Short of a revolutionary change in the way Indian government works, things are good. The imperatives are in place. The fiscal is going in the right direction. So I'm fairly favorably predisposed toward both dynamic right now.
Taimur, always great catching up with you, sir. Thank you very much indeed for joining me on Inside India. Taimur Baig there from DBS Group Research. Coming up on the programme, the annual Shangri-La Dialogue kicks off here in Singapore. We'll be live at the event after this short break. Welcome back. Global leaders and top defence officials are in Singapore for the annual Shangri-La Dialogue. CNBC's Lin Lin is leading our coverage on the ground. Lin, we know that China isn't sending any top officials. Are both India and Pakistan attending after the recent conflict?
Yes, so on that front, Sri, we know that both sides have sent a top military delegation, but they have not sent their respective defence ministers. We will get a chance to speak to the top representatives of those respective military delegations this weekend and hope to bring you that conversation as well on Monday. One of the other things that a lot of country representatives are watching out for as well is US representation as well as US messaging. And on that front, we know that the US Defence Chief, Pete Hegseth, he is here. He's set to give a speech tomorrow morning as well. This is, of course, coming at a time when many countries here are grappling with the uncertainties of trade, tariffs. There's also question marks that have been raised about US commitment to traditional security allies, and I suppose on that front, Europe is the best example of that. But we are expecting here, like what we saw during Pete Hegseth's first visit to Asia just a couple of months ago, that we will get a reiteration of that commitment to the Indo-Pacific region, keeping in mind that the US position on China is very much bipartisan. And as you mentioned at the top there, the top military official for China, Dong Jing, is not in attendance. He has been in recent years. We don't have an official explanation as to why, but certainly this is a missed opportunity for engagement at the highest levels, coming at a time, mind you, when we heard US officials yesterday, when they were being asked about military-to-military communications, that they are still trying to find the best way to engage with China. Shri.
Interesting, Lynn, and there's a narrative that Secretary Hegseth and President Trump could be visiting India and the broader region in October to further the narrative over the Quad. Thank you very much indeed for that, Lynn. Here in Southeast Asia, the Philippines once again resisting Chinese claims over the disputed South China Sea. JP Ong joins us with more. Good morning, JP.
Hey, good morning, Shri. It's also related to security concerns that Lynn was touching on also. There's been a few flashpoints actually in the South China Sea. Before the ASEAN summit actually kicked off, the Chinese Foreign Ministry actually hit out of the Philippines because the country was sending apparently research vessels with media crew and film crews actually to these Spratly Islands, which China, of course, claims as being part of their territory, saying that this is an indisputable part of Chinese sovereignty, and the Philippines is trespassing on these areas. Now, the Philippine Foreign Ministry has a Foreign Affairs Department actually also said, clarified that this is a part of their territory and that it continues to be something that is actually held up by international law, referring to the law of the sea, which the Philippines won an arbitral award, saying that the 9-dash line on which China bases their claims in this area is actually moot and does not hold any water. Now, it's important to note this because at the at the ASEAN summit, there was a chance to actually bring up the possible code of conduct established in this particular area, because it's also important to note, Sri, that it's not just the South China Sea that China has disputed areas of claim. Keep in mind that one of the northeastern provinces of India is also being claimed by China as being part of their territory. And India in 2023 also actually criticized China's move to include that in some of their updated maps. So what's important here is that you need codes of conduct to govern and make sure that nothing gets out of hand while these disputes are being ironed out. And it's not something that just impacts Southeast Asia, but also parts of India, as you can see from this particular map.
Plethora of competing maritime claims in the disputed maritime region, so that makes it very complicated. Yes. Thank you very much indeed for that. We'll be back with more. We are counting down to the market open in India. This is how we are shaping up. Let's give you futures as a guide of what to expect. Give Nifty futures pricing in an implied open in the region of still below 25,000, 24,951. That would imply about just under 100 points to the upside at the open. Dollar rupee exchange rate steady at 85.3560. Now, we have been tracking the semiconductor story in India, of course, and the country's ambitious plans to produce a made-in-India chip by the end of this year. We spoke to India's former Minister of State of Electronics and IT, Rajiv Chandrasekhar. He was part of the ministry when India launched its semiconductor mission. In our wide-ranging conversation, Chandrasekhar told me about India's position as a manufacturing hub and its chip ambitions.
The first silicon to be packaged and manufactured in India is expected. This is really the Micron packaging unit in Gujarat, which is doing memory wafers being packaged into various footprint and various products. It is expected, it was certainly expected to be December 2025. But, we would be, I don't think, too far out from that schedule. And so really, in a lot of ways, that product coming out of that factory, which is an absolutely brand new ab initio greenfield factory in Gujarat, India, would mark a big milestone in what was almost a 65 years hiatus for Indian semicon. So, yeah, I mean, I can't precisely tell you whether that date will be met, but it's certainly going to be in that ballpark, and it's going to be a very important date.
Will a US-India trade deal, if that does materialise, Rajiv, will that move the needle on developing India's deep tech ecosystem?
I think, look, India and the US have already signed these very comprehensive, integrated, critical emerging technologies agreements under the previous administration. So I think it is a clear assumption, takeaway, that the future of tech, and there is going to be a huge disruptive future of tech, this whole super cycle of AI and semiconductors, will be in large part scripted by a coalition of democracies coming together of a few like-minded societies and countries. And those countries will include, of course, the US. And we see India being a part of that coalition. We see Singapore and we see like-minded other countries which are democracies, which are societies that believe in cooperating and building technology for the common good of humanity, working together to shape the future of tech. It is not a zero-sum game. It is no longer a world where one country can pretend to dominate, control the future of tech. It's just not possible. That train stopped 2.5 decades ago. We have our ambitions. We believe we have the confidence Indian entrepreneurs have and Indian technologists have to be part of a movement that will shape what AI will look like for the world, that will shape what the future of the internet will look like for the world, that will shape what the future of compute and semiconductors will look like for the world.
India, Rajiv, is increasingly being perceived as the China offset. And let's bring in NVIDIA here. If they are virtually locked out of a $50 billion AI opportunity in China, then is that an opportunity that's India's for the taking?
Yeah, but I don't think our approach to our ambitions, India's ambitions, has ever been through the China prism. Certainly, we don't see ourselves, no Indian youngster or talented entrepreneur sees himself as some alternate to any other country. I think today what we are seeing, whether it's Apple's manufacturing of iPhones in India or every large global tech company having its R&D center in India, it's a reflection of the significant capabilities that Indian talent represents. And so therefore, India stands on its own capabilities. India will succeed or fail based on its own capabilities. And I don't think this is to do with being a binary or the flip side of any country's coin. I mean, if China succeeds and fails, they will do so on their own. If India succeeds or fails, it will do so on our strengths and weaknesses.
So it's really merits-based. What are you hearing about Apple's commitments to build more manufacturing in India?
No, look, I can tell you what my experience was. I was minister for three and a half years. And in 2021, Apple had absolutely no presence in India. In 2014, India used to import about 98% of its mobile phones. And last year, we exported several $1 billion of made in India iPhones and Samsung phones. So look, it is smartphone manufacturing is about as precision and as high-skilled manufacturing and assembly as you can get. And the fact that a company like Apple and a brand like Apple over 3 years was able to ramp up from zero to this type of scale, where some of the largest factories in Asia are now in India that are manufacturing Foxconn factories for Apple and other products, tells you that talent can be ramped up and built very quickly. And I can tell you, I can share with you what Tim Cook told me when he walked into my office some months ago. He said, look, we were taken by surprise in how fast India could deliver this type of a precision, high quality product as an Apple iPhone. So look, it's a myth. And it's certainly not anymore the truth that manufacturing can only be done in one geography. I think India is a very, very competitive manufacturing investment destination. And we are proving this every day with different types of products. It's automobiles, it's electronics, it's batteries, it's EVs. So I think India for several years was absent or declining present in the global value chains, manufacturing value chains. That is not the case anymore. And our ambition is a significant ambition. We believe that as the GVCs morph, change to being more, where consuming countries want more safe, trusted, resilient value chains, India can certainly be one of the partners of that value chain.
It has, however, been a mixed picture overall from foreign investors when it comes to developing advanced manufacturing. Adani pausing talks with Israel's Tower Semi, Zoho pausing in Karnataka, Vedanta Foxconn seems to be an off and on again story. What is the missing link here, Rajiv?
No, look, I think when you sort of open up and invite investments into certain new sectors, you will have a lot of marriages and tangos that go wrong. So I think the Vedanta Foxconn was an issue of the relationship unraveling, because Foxconn has just announced a big investment in semiconductors in Uttar Pradesh with HCL Technologies. So it's not like that investment went away, just that they changed partners and chose another partner. In terms of Tower and Adani, I am a big believer in Tower. It's a great company. It's an independent foundry company. I think it's a question of maybe the Indian partner wanted leading edge technology and Tower is more legacy, analog type technology, and maybe that's the misfit. But I continue to believe that Tower is an excellent company to invest in India. And I certainly, I was a minister when I invited them to India. And I hope they work this out and work through and eventually make an investment in India.
Rajiv, final question is about perceptions of a talent drain or a brain drain from India. Is India at risk of losing the next Satya or the next Sundar because there is a perception that the grass is greener in Europe, in North America, in fast-growing markets here in Asia outside India?
Look, one of the things that I had to do when I was minister is really target, when we announced the semiconductor policy, to get the Indian diaspora back, because the semiconductor industry in the US, and I worked at Intel myself, is got a significant population of Indian semiconductor professionals. And you know what? Many of them came back. The Tata Electronics fab that is being set up by an industry veteran, Indian, who migrated back from the US. So I would argue, look, migration, talent movement is a global phenomenon. I always say the equation here is investments come to where the talent is and talent goes to where the opportunities are. So essentially investments go to where the opportunities are. That is a reality. That's true for China, that's true for Singapore, that's true for India. But having said that, I think the extent of brain drain that we saw in my generation, and Satya is a junior of mine from college, and Sundar is obviously junior to me. That generation, there was a net outflow of people and talent. But I think that is that asymmetry is being corrected. And there's a lot more people coming back to India today because this is where the action is, this is where the opportunity is, this is where growth is, headroom for growth is. And this is where they can make a mark, as opposed to being in Silicon Valley and being a small fish in a small pond or a big fish in a big pond. You can be a big fish in a pond that is growing. And that creates value for yourself, that creates opportunities for yourself. So we are seeing a lot of people come back. It's not to say that it's a net inflow type of a situation just yet, but I think it's not like the old days, for sure.
We'll touch on that. Now, keeping to the theme of AI in India, ad tech firm InMobi is doubling down on its AI expansion amid plans of an IPO. InMobi has recently launched an AI-based commerce platform called Glance AI, and they're calling it the ChatGPT of shopping. The company is also reportedly seeking $500 million from private credit funds to buy off a stake from its investors like SoftBank. Delighted to say that Naveen Tiwari is with us now, the founder and CEO at InMobi, and joins me here on Inside India. Naveen, welcome. You just launched Glance AI about a week ago. How transformative is this going to be for the user experience? Does it mean more users and more transactions across the platforms? And ultimately, where does this leave InMobi in terms of monetization of AI?
Firstly, thank you for inviting me to your show, Sri. Look, Glance AI is fundamentally going to change the way the world shops. It is adding intelligence and generative AI experiences to shopping. It's never been done before. We trained a foundation model of commerce, at a global scale. We launched this about a week ago. The results has just been fascinating, right? When you bring in generative AI experiences to shopping, it changes the way you and I would shop, because unlike the existing shopping experience where you see a product, what generative AI does is you see the product, but it actually brings the product in a spatial element with you in it, right? So therefore now you can see, traditionally all of us would go into a trial room to try products. Well, generative AI can actually do two things. One, it tells you what looks good on you, then shows it onto you, and then tells you where to buy it from. All of these three things is done in a single click of a button. That's the level of intelligence Glance AI brings to commerce now, and we believe it's going to change the way the world shops. And consumers, we have about 1.5 million users in the United States. Consumers are absolutely loving it. They're not just engaging; they're obsessed. We are seeing every consumer generate about 18 commerce experiences a day, use Glance AI for almost 20 minutes a day, and 40% of them are starting their shopping journey from a generative AI experience.
And nobody else is doing this?
Nobody in the world yet has done this.
This is proprietary?
That is correct.
What does it mean then in terms of the translation into user growth? Can you paint some numbers on that?
Well, we expect to hit like 50 million users over the next 6 to 9 months. But look, when you launch these kind of technologies, you really don't know what's going to happen, because we have been surprised at the scale of the technology and its adoption already. So some of these things just go through the roof, and we would just be excited about where it finally lands.
What does it mean in terms of where it puts the revenue stream for InMobi?
Well, it is an important stream of monetization eventually. We're not very focused on that today. Will this be an important stream for InMobi eventually over a long period of time? Absolutely. We just don't know how big it's going to become. What we are very sure of, if you're able to change the way the world shops, monetization will follow. And I think what we are very focused on right now is developing the technology and furthering it so that the model evolves so rapidly that it provides the level of intelligence in shopping that nobody else has ever seen before. And I can tell you, Sri, it is totally changing the way people think about commerce.
And does this dovetail into the premiumization of the consumer in India, into financialization, into this entire quick commerce narrative? And I would imagine that lends itself very neatly to all those drivers.
Well, so two parts. Part one, the platform is launched in 140 countries. So we're not just in India. We have also launched in India, but 140 countries. Most of our users today are actually in the US. All right, that's one. Second, just specific to your question in India, yes, of course, it kind of fits we are not competing with anybody. We are a technology layer on top of all the experiences of e-commerce that exist in any part of the country, also in India.
You heard Rajiv there earlier, Rajiv Chandrasekhar, about talking about where potentially the next Indian Silicon Valley could emerge. And I know that the government is actively promoting Tier 2 cities. Where does InMobi see the most fertile ground to capture new talent, to build out innovation hubs and grow the business?
It's a very interesting question, Sri, and here's how we think about this. So we fundamentally believe very strongly in our core hub of Bangalore, firstly, to begin with. We think it is a place where the best of technologists are showing up. We created this deep tech foundation model in Bangalore, right? So we feel very kicked about the fact that, India is starting to arrive on deep tech innovation, and we are able to build it right there. And we don't need to actually look across the shores to essentially get that level of talent. So that's one. Second, we actually believe India is going to evolve itself into a two-tier model. The tier 1 cities like Bangalore will kick in for high-end work, but the tier 2 cities like Lucknow, Indore and Jaipur and all of these places are also going to kick in, because you know what, the new talent does not necessarily want to move from their hometown to the bigger metros. And they are very talented. So we recently opened our office in Lucknow, which I would have never thought a few years ago that, as InMobi, which is a technology company, would ever go down the path to open one in Lucknow. But we went there. We were extremely excited about what we saw, the talent, the depth, the desire to actually stay there, and the hunger. The hunger of India has now actually percolated from the big cities down to the smaller cities. And I think companies like ourselves and many others are going to leverage that quite a bit.
Commerce Minister Piyush Goyal was talking about India's tech ecosystem, how it needs to step up and provide better quality, higher paying jobs to recent graduates and younger job seekers. Is InMobi part of that solution?
We think, look, we are very deeply involved in creating deep technologies. We need talent in India, and we look for talent in India, and we think we are a very strong provider of high quality talent and a strong payout to them at that point of time.
So yes, InMobi is in hiring mode?
Absolutely.
Give us then, clearly these flywheels are really active, ad tech and consumer tech. And I wanted to bring in ad tech and bring in the quarterly GDP number that we get later on today. Ad tech must be a great barometer for the health of the broader economy. Are business and market conditions consistent then with what you're seeing and flows across the platform with growth in the region of 6.5%?
Ad tech is a very sensitive industry to the GDP growth. It is the first to correct itself and adjust itself both to the downturn and the upturn. So you're right. We're clearly seeing the 6.5% growth rate getting reflected very strongly into ad tech. And the idea is very simple.
No signs of any softening?
Not yet, not at all. We are actually seeing, to the contrary, we are seeing growth signs right now being very, very solid. We did see a little bit of hesitance in the month of April when I think the world was a little unsure of what's going to really happen. They kind of waited it out for that few weeks, and then they were all back in. So and that's why I meant that the ad tech kind of gives you a very strong sensitivity to what's really happening. Just it reacts very, very rapidly.
Can you give us a strategic roadmap and perhaps a rationale for an InMobi IPO and when that could happen?
Look,
I've been hearing October.
You've been hearing October. I would say we are very kicked about being a public company. Look, for any entrepreneur, for anyone who starts a company off, it is an important aspect to essentially go out and become a public company. We would be very keen to be one. We are deeply thinking about that topic.
An evaluation of between $8 and $10 billion. Does that sound right?
I would let the market decide those things.
Okay. Is there any substance to reports that you're in talks with private credit funds to raise $500 million?
Well, you know, there are so many conversations we have. We are a large enough organization where we do try to do many, many things. So we're in conversations for a variety of things with variety of capital partners. We have a lot of capital partners. So I wouldn't necessarily put anything specific against that claim, but we have a lot of conversations happening all the time.
And one of those capital partners is SoftBank, 40% stake in InMobi. Are there any plans in the conversations that you've had with Masa-son to raise that stake?
Well, you know, they're close partners to us. We are trying to figure out things in the future.
Very final question, Naveen. Are tech entrepreneurs like yourself, and you are internationally exposed as well, are you largely agnostic about what's going on with this tariff and trade narrative and broader global growth concerns?
Well, the way I would put this, Sri, is that I don't think we're agnostic to it, but the pace at which these things are changing today, you are better off being like just observing it and not necessarily trying to figure out your strategy basis that, because nobody knows what it's going to look like. So I think we're going to wait for the things to settle, if they would, and then figure out our strategy. As of right now, we are just executing as if nothing's changed. The world is exactly as it is, and we're just going for it.
Naveen, we'll leave it there. Suffice to say, InMobi recently turned 18, and you're still thinking like a scrappy startup, and agility and innovation are a core part of that thesis. We'll leave it there, sir. Thank you very much indeed for joining me. Naveen Tiwari there from InMobi. Right, Indian markets have just joined the trading day. We'll look at some movers after the short break. Back in 2 minutes. Welcome back. Indian markets joining the trading day. Let's give you the Nifty 50 and the action there. Flat at 24,842, let's call it. Dollar rupee exchange rate at 85.30. Now, shares of Ola Electric are skidding as the Indian electric two-wheeler maker's quarterly loss widened for the first time, hurt by falling sales, hefty discounts and a one-time provision. This even as it provided guidance for the first time ever, saying margins would improve and that it would be profitable in full year 2026. Ola down by 6%. Shares of Bajaj Auto, after the Indian automaker warned, are down by 2%, warned that further delays in receiving supply of rare earth magnets from China could seriously impact their EV production by July. This as the company beat quarterly profit estimates thanks to higher motorcycle exports, making up for a slump in domestic demand. Let's take a quick check of shares of defence shipbuilder Mazagon Dock falling in trade today, down by almost 6%. This after net profits sank 51% in the fourth quarter. The stock had been rallying after interest in the defence sector post the India-Pakistan conflict. That's it for the programme today. We will be back on Monday. Do keep watching CNBC. Access Middle East is up next. But before we go, we'll leave you with some visuals of an Indian wedding procession that shut down a part of Wall Street. 400 people were a part of this procession, gathered outside one of the streets. But I'm sure the Indian sweets and the gulab jamun made up for it. See you next week.